Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you two examples of morning gap trades from this morning. One of them was an absolute home run hit for more than a 7% gain in the first 90 minutes of trading. Listen, gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. Let me explain exactly what it is. When stocks are gapping higher or lower at the opening bell, it creates opportunity for traders. And the opportunity for traders is when they can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. You're seeing a sneak peek of Devon Energy on the screen. The support level identified this morning was $30.53. You can see what happened when the stock came into that level. We had an immediate reversal and the stock ripped higher for the rest of the morning session. We'll get back to the chart of Devon in detail in a minute. Let me get back to gap trading, because what I do is teach a course where traders learn everything they need to know in order to trade the gaps successfully. Which stocks does this work the best with? What are the specific criteria that we're looking for? For example, what type of volume do we need to see on these stocks? How much of a gap higher or lower in the morning are we looking for in order to qualify to be one of our morning gap trade opportunities? And there's a whole list of other criteria that's obviously taught and gone over in detail in the course. The most important thing traders learn when they take the course is how to calculate and identify these specific price levels where stocks will be drawn to like a magnet and have that price reaction from in the other direction. How do you find the premium support levels or premium resistance levels for these stocks? That's how money is made each and every day using this strategy. Now, the other thing I do is give traders an opportunity to get my gap trade sent right to their inbox at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email. As you can see, it arrived just before 9 a.m., and that's Eastern Standard Time. This morning, we had 6 potential morning gap trade opportunities on the list. As a result, 2 of these stocks hit their price levels and produced positive and profitable trades. One came extremely close, but close isn't good enough for us. We only take the trades that come into the price levels that we learn how to calculate in the course at Lazy Gap Trader. These are the high probability trades. If a stock doesn't hit our number, we don't want the trade. It's off the board. We only want the premium and high probability trade setups. The 2 money trades, or the 2 stocks that hit their specific price levels, were Devon Energy, gap lower, support levels are $30.53, and I gave 2 secondary support levels. When I give more than 1 support level, that's telling traders that there's 2 additional potential trading opportunities. The $30.53 level is its own independent trade from 28.38, for example, and then the 26.23. Each of these levels should provide a positive and profitable trading opportunity if they're hit. We didn't get below the 30.53. The stock took a rocket ride higher off that level and is still trading higher yet as I make this video. Stop and profit target is about 30 to 55 cents. Now keep in mind, these are minimum profit targets. This is where we want to take an initial profit target. We take some money off the table, and in my course, there's an entire video module that teaches traders how to get the most possible gain out of these trades, turning these trades like Devon into a risk-free, emotionless trade for the rest of the ride. We'll get into that further when we go back to the chart. The second one that hit its level today was Advanced Auto Parts, AAP. Gap higher, resistance levels are 116.05, and it's important, remember that number, 118.76. Stop and profit target is about 50 cents to 90 cents. Again, minimum profit targets. We're going to go over this chart in detail, but it's important to remember the 116.05. All right, we're back on a chart of Devon, and as you can see, the stock closed yesterday all the way up at $34.65. The stock was gapping down at the open, getting a pretty nice haircut. We identified, and any trader that's taken my course is able to calculate the same exact price level of $30.53. This was the price level we expected the stock, if hit, to have a price reaction and reverse higher producing a profitable and positive trade. Obviously, that's exactly what happened. The stock traded slightly below that level, down to $30.25, but well within the stop loss limitation outlined in the course and outlined in the email from this morning. And from there, it's pretty obvious what happened. The stock put in a tail candle, and we had a rocket ride higher all the way up to a high of $33.21. Now, in my course, I talked about the fact that traders learn how to turn trades like this into risk-free, emotionless trades. We learn how to take some profit along the way, and we learn how to not let the stock ever go against us, turning the trade into a risk-free, emotionless trade, trailing the stop along the way, and letting the market decide when enough has been enough. So at the point I'm making this video, the trade is obviously over, but some traders may have gotten $1, some traders may have gotten $2 out of this trade, some might have even gotten all the way up over $33 a share. Net, folks, any way you look at it, this was a home run trade. These happen more than you would think. We catch the low of the day more than you would think. Now, the next one was Advanced Auto Parts. Remember the 116.05. It's very important. The stock closed yesterday all the way down at 105.35. The stock was getting a nice boost higher at the open. It obviously came up on our morning gap trading scan list, and it opened the day at 116.88. That's above the 116.05, which was the first level of resistance cited in the email. Traders who have taken the course know that when a stock opens above a resistance point or below a support level, that level is off the table. We look to the next level. We're looking to short this stock at resistance. Since the stock opened above the first level, we look right to the second one, which was 118.76, and you can see what happened. Once the stock hit 118.76, it immediately backed off, and just minutes later, the stock was at a low of 117.26, representing about a $1.50 gain in just minutes of trading. Now, obviously, at the point I'm making this video, the stock is significantly lower than that, trading at 116.46, give or take. What did the stock do? It came back down to what is an important level at 116.05, give or take a few pennies. And that brings up another point that's extremely important. It's the why behind this strategy. When traders take the course, they learn why this works. And that's what's most important, is because once they understand the reason these price levels are important to these stocks, whether it's a support level or a resistance price, once you understand why these price levels are important, you have a different outlook on your trading. You have a different expectation of what should happen when stocks come into these price levels. You have a different comfort level when taking these trades. It removes the guesswork away from trading, and it adds back in confidence in taking these trades. When you remove guesswork and add in confidence, that changes your day trading, it changes your outlook, and by the way, it changes your profitability. No two ways about it. Look, do yourself a favor. Come over to check out the course at Lazy Gap Trader. You can learn everything there is to know about how to trade the gaps successfully each and every day. Everything you saw in this video and a whole lot more, and you can do it for the remainder of your trading career. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, folks.